Hey guys, welcome back to the channel. So today we're talking about Nvidia, which has been the darling of the stock market recently. The stock has been rising with the AI revolution, but I don't think this will last. There are three main reasons: the commodification of AI chips due to competition, ridiculous valuations, and the AI bubble where everyone thinks nothing can go wrong. Nvidia is often seen as a company with unlimited growth potential, but that's unlikely. AI spending will eventually decrease. We've seen tech cycles before. AI is revolutionary, but expectations aren't meeting reality. The biggest threat to Nvidia is the commodification of AI chip. Right now, the stock price is built on Nvidia being the king of AI, but there are alternatives. Companies are catching up. The first to look at is AMD has fallen behind AI chip wars, but is quickly catching up, particularly with the new rollout, the MI competitor to Nvidia's Blackwell chips. AMD announced it will begin shipping them in large quantities next year. How will that eat into Nvidia's market cap is to be seen, but the effect will be significant. According to developers and cloud giants, it's a very effective substitute. This diminishes Nvidia's pricing power. AMD has made chips that come close. We'll see real competition to Nvidia's data centers. The Instinct chip will start production before the end of 2024. If AMD's chips are seen by developers and cloud giants as a close substitute, it could put heavy pressure on Nvidia's gross margins, which are 75%, hard to sustain with competition. That will put significant downward pressure on Nvidia. Also, companies like Apple, Google, Amazon all working on in-house AI chips. Nvidia, AMD is the closest competitor now. This isn't far away. The beginning of next year, we'll see these chips roll out. We're going to see a huge erosion in these gross margins. 75% is not sustainable in any industry. The only way this is sustainable is for monopolies. I do not think Nvidia is a true monopoly. They have competition heating up, which will erode Nvidia's pricing power and margins. For now, one benefit is the exorbitant spending on AI by hyperscalers like Amazon, Google, and Meta is fueling the rising stock market, but we don't think this will last. If you think back to the last time a company spent exorbitant amounts of money with little to no profits, it's only Nvidia making real money off it, while Amazon, Google, Meta are implementing deals but not really generating revenue. For now, we're still in the AI hype bubble. Investors believe that these products will eventually start making money, but right now training costs and building data centers are just fueling capex to levels we've not seen. The only comparison I have is the Facebook AR VR catastrophe. They spent almost $50 billion over 4 years in this pipe dream that AR and VR will be the next big thing. I'm not saying AI isn't. It will take time for the product to mature. Investors will realize they're spending billions without a viable product bringing in revenue. Right now, investors are tolerant, but eventually reality will hit and they will realize this isn't sustainable long term. Bound to happen. We all remember what happened to Meta stock when investors realized that this $50 billion in spending is not going to amount to any real revenue gain for the company soon. That was one of the largest stock crashes in US market history. So that is what I feel will put a brake on Nvidia. One, the over commodification of AI chips with AMD releasing their competitor chips, as well as Google, Amazon, and Meta all building their own chips. The excessive spending that investors have tolerated, but only for a bit longer before demanding a return, will make hyperscalers listen to investors and pull back. capital spending on AI seems to be high across the board. CapEx close to 20 billion for 75 billion for Amazon and Google, and this is going to come up eventually. Exorbitant valuation that Nvidia already has. Maybe it can take on the competition, but right now investor expectations are that this company can do no wrong, and when expectations are this high, even small disappointments could lead to a significant correction in the stock's price. Nvidia is still the top pick. 93% of Wall Street analysts rate Nvidia shares is a strong buy or a buy, with a price target of 173. When 93% of analysts believe that a minor disappointment in earnings, market acquisition, or margins, which are at 75%, could pressure the stock. Even with competition from AMD, I don't think that's sustainable. When investors realize this bubble, it will pop. If you're in Nvidia, take some profits and invest elsewhere. You made a ton of money, use that to make more somewhere else. That's all.